So back to the topic at hand. I usually use 3 rules of thumb to qualify a buyer over the phone. Hey, welcome back to my channel. This is Pistol Pete. I'm a local real estate agent here in Santa Cruz County. And today in this tip video, I'm gonna be breaking down how exactly I qualify a buyer to buy a home. If this is your first time to my YouTube channel, thank you so much for stopping by. My name is Pistol Pete Eubank, and I run a real estate channel here about Santa Cruz County. What I showcase here on my channel is local home tour videos of unique properties in the area. The second type of video that we make is community interviews. And so those are interviews with local influential people or business owners to give you an inside scoop on who's here and why they're doing business here. Real estate tips to help you navigate the real estate market. So we'll dive deep into real estate topics that are hopefully helpful for you to learn how the real estate process works in Santa Cruz County. So the first rule of thumb that I begin talking to buyers about when discussing a home qualification is debt to income ratio. So usually when qualifying a buyer over the phone, I'll talk to them about what their adjusted gross income is, or AGI. So typically a conventional lender will want to see that you can spend about 43% of your adjusted gross income on buying a house. So that means 43% of your income can be used to buy a home or pay off your mortgage monthly. So to use round numbers, let's say your AGI per month is $10,000. So you're making $10,000 a month. That means you could probably qualify for $4,300 a month in payment. And that payment should include principal, interest, property taxes, and insurance. It's what's called PITI. So those 4 things need to be included in that $4,300 a month. Some programs are more flexible than that, but let's just use that as a basis. The second rule of thumb that I use to qualify a buyer over the phone is credit. Having good credit is paramount to buying a home, and if you have better credit, you get a better interest rate, which means lower monthly payments. If you have worse credit, sometimes it's a little bit harder to get a loan, and you'll probably have a little bit worse interest rate. But it's not the end of the world. So usually the bottom credit that you're gonna need is an average score. So between the 3 credit unions, you need to have an average score of 640 or higher. That's just to get you in the door, usually. There's some programs that don't look at credit as hard, for instance, like FHA, which is a 3.5% down program that's backed by the government for first-time home buyers. But let's just, for the purposes of this video, talk about 640 and above. And of course, the higher that you get, the better. A good lender that I can help set you up with, though, can help you improve your credit so that you can get the best terms possible. So if you're interested in hearing more about that, just let me know. So my third rule of thumb for qualifying a buyer over the phone to buy a home is clean tax record. Most of the time, a lender is gonna look pretty deeply into your tax records to verify your income. So as long as you've had the same job or worked in a similar industry for the past 2 years, what they'll do is they will look into your tax records for those years. So for instance, we're filming this in 2021, right around tax season. So they may require 2020 tax returns, 2019, and then possibly 2018, depending on who you're working with. So make sure that your tax records show your adjusted gross income. That number, that AGI number, is gonna be similar throughout the years, or show improvement is even better. If you take our 4th rule of thumb, so using our example of the person that makes roughly $10,000 a month in AGI, that means that they would qualify for about $4,300 a month mortgage payment. Take that $4,300 and divide it by 550, and that gives you a numeral of about 7.81. Then we take 7.81 and multiply it by 100,000, and then that gives you about $781,818 in loan approval. Then after that, you add whatever down payment you were looking to put down, whether that be 5%, 10%, 20%, 25 or more, and then you get what your loan approval would be, your total purchase amount, what you would roughly qualify for. And that puts you in a place currently, if you have good credit and you have good standing in your taxes and you don't have any long-term debts, that puts that buyer at 5% would be about $821,000, 10% would be about $860,000, 20% would be about $938,000, and 25% would be about $977,000. This is all subject to the final approval process going through an actual lender. Usually I just like to qualify over the phone like this just to give you an idea of what your situation is, what your financial position is in our market. So some other items that I want to mention here in this topic are items that can derail your loan just because they're common things that I've seen buyers do. So it's really important to be truthful and honest and open to your lender because they're really your advocate towards the financing end of your transaction, as I am your advocate towards your real estate purchase contractual end and negotiating end. So we're really here to help you in your process, and we want to make sure that you have the best experience possible. And for instance, the lender is going to be your advocate to the underwriter. So if there's anything, for instance, like unpaid child support, maybe a bankruptcy in your past, or maybe a short sale or a foreclosure that you're just scared to talk to a lender about because you don't want it to derail your process, it's usually best to mention that up front. So then that way they can help you pivot around it or help you present your income in a different way or offer you different solutions that might be creative to your situation. So being honest with your lender is definitely a huge step, and I would absolutely recommend it. One last tip that I have for you here at the end is don't go off and make a big financial purchase that's financed during an escrow. That's the one thing that will absolutely kill your deal. So, for instance, a classic one is going out to buy a car. Don't show up to your sign-off appointment in your new Corvette, and that's actually happened. That will definitely kill your deal. Hey, thank you so much for watching this video. Please check out my other videos on my channel. Let me know what you like, what you don't like. In the comments below, if you have any questions about getting finance or you're looking for a good local lender in the Santa Cruz, San Mateo, or Santa Clara County areas, I'd love to help you out. And again, if you're interested in buying or selling a home or interested in what the real estate process is like, I'd love to help you out. Hit me up in the comments or call me direct at 831-471-7330. Can't wait to talk to you about your real estate needs.